All right, everyone. Welcome, one and all. Hope you're having a fantastic day. Let's go ahead and make sure you all can hear me. If you would please go ahead and type the number 1 in the chat box to let me know that you can. You guys kill me. How you doing, Jeff? Goodness gracious. Good morning, good morning, good morning. Yeah, I need to get promoted to a position that doesn't take as much work as it does from me, Erica. Zoom was messing with me. It would not allow me to log in as the presenter. It said someone else is already hosting the meeting. You can log in as an attendee. So I was trying to get Lee to get me promoted to presenter so I could share my screen and all that good stuff. And he turned on my mic. I wasn't sure who was able to hear it. But I did need to get promoted. I'm there now. I got the job of chief bottle washer and head cook. Afternoon, Frank. I do appreciate everybody chiming in there. Help me out. That is wonderful. As we do get started here, keep in mind that everything we look at is for educational purposes. Nothing's meant to be advice or recommendations. If you like what you see, and I mean anything that you see here, make sure that you confirm that it fits your own personal risk profile. There we go. And risk tolerance. Don't ever take on a trade or enter into a strategy that does not fit that risk profile for you. All right. So we've got a lot happening this upcoming week. Inner Circle is coming up tonight at 7 p.m. Mastermind Group is tomorrow at 8. I'm teaching it there. Monster Market Movers on the 14th, folks. Make sure you're checking out that training. It is going to be fantastical. You are going to love the topic for tomorrow. And then we've got a couple more coming up next week. Power Hour, let's do this. Power Option Plays, Covered Call Explorer are on regular schedule. Come next week, E-mini Think Tank Vegas spread, no class on Monday because of Juneteenth. Power Hour will be moved to the 20th. You guys did great last week or 2 weeks ago, whenever it was for Memorial Day, as far as making it on a Tuesday instead of a Monday. So we're going to do that again. And then Trading Coaches Playbook will be on the regular schedule. And then tonight, Brandon has his final How to Trade the Market. Don't miss it, folks. I'm going to give you a little hint. He's already maxed out in capacity there. So those of you that are here with me now, make sure you get in there right as we open those doors, 7:30, 35-ish, to guarantee you get a slot inside of there. All right. And Lee dropped some links in for that as well. Here's our follow us page. Make sure you are following along. And one of the things that I want to make sure that you do not miss out on is going to tradinglikeaboss.com. This needs to be something that, we're probably going to put this in the Sunday newsletter, right? We're going to put this in a newsletter that says, hey guys, go over to tradinglikeaboss.com and get registered for all your trainings for this week, right? Because if you go over to the newsletter, you get that link in the email on Sunday, and you go over to the newsletter, and it's our website, right? It's our web page, right? Except if you just put newsletter in front of it. Now, let me just bring this back here. Go to home and let's just put newsletter. All right, this is what comes out on Sundays, guys. Have you guys noticed some of the pro tips and the stuff we're putting in there now? We've got some educational things happening in here, right? As well, right? Last week was some option stuff. Now we've got on more options on Greeks, okay? So make sure you're registered for this, right? All of these now, the class schedule becomes clickable. I don't know what the heck happened here. Big, little, big, little. Lee, send an email to Sean. Ask him to take a look at that, please. Trading Coaches Playbook, big class. Right? We definitely got some things happening there that are not working right. Okay. Earnings, economic reports, right? We're going to put something in here that says, go over and get registered for your weekly classes. What I mean by that is, if you go over to tradinglikeaboss.com, you will find all of the upcoming trainings that we've got going on. Power Hour, Trading Coaches Playbook, and you should just register for everything all at one time. No ifs, no ands, no buts. It just needs to happen. Just get it all done right from this page instead of waiting, right? This way you're registered. It'll show up on your members area. You record it in your calendar because an email comes out that shows you how to do that. And you'll be good to rock on. Okay. So don't pass up on that. Don't miss out on that. Just do it all at once. It's just easier to remember. All right. Here's the Trading Boss Manifesto. It goes in line with tradinglikeaboss.com. This is what it means to me, to the company, to everybody that works here, that is part of this family, what it means to help you become a trading boss, right? This is the manifesto of what we're going to do to help get you there, of what we believe in, right? I read this aloud every single morning, and I'm doing it every single night because I've got a new part of my daily routine where I kind of wrap up every night right between 7:30 and 8 o'clock. I wrap my day up. I'm not saying I'm working up to that time every day, but I'll come back about 7:30 or 8 o'clock and I close my day up, getting ready for tomorrow and such, right? My routine makes it to a point where by the time most people are getting started with work, I've already got 3 or 4 hours worth of work done. I've got more accomplished already at that time in the morning than most people get accomplished throughout the course of the day. And I have to. I'm just a high functioning individual. I've got to get stuff done. I can't function without it, right? How to trade the markets. Brandon's class coming up this evening. Again, last one, so do not miss out on it. All right. Woo! Okay, so let me go ahead and let me bring this over here. What do we got for Q&A? All right, let me put this down there. Let's go ahead over here. And let me bring up, well, actually, let's go ahead and do this. Let's talk about the trades from today. What trades did you guys do? Drop those trades in. It is time. That is the time, right? This is one of the most important pieces to me and should be for you to not only see the trades that we're going to show you that were done today, and not just by me, but by others as well, but for trades out there that each of you are doing, right? I love seeing the drop-ins there that said I made $200, $1,200, whatever the numbers are. You know, didn't do any trades, that's okay. Funded, not funded, it doesn't matter. Profitable, broke even, went against you, it doesn't matter. The goal here is to get it done, right? So Brendan, no trades, internet provider just like, okay. Couldn't find anything on SPY today. I know, Paul, it was tough on SPY. Let's say PK said $45, Meta one contract, $35, Netflix one contract, $40. Roku still in, but I'm down, but not stopped out. All right, great job. I did Meta today, PK. John said, Wheel of Fortune, Riot, Beyond, Naked Puts, Edit, Cash Flow, $1,000, folks. This is a weekly thing for John. Right? Every Monday, he's telling us what he's doing, that's what I want to see, guys. That's what this should be right here. Let's see. Kevin said, I'm up on Marvel, bought on Friday. Nice job. Nice job. Good. All right. So I've got a couple of things from today. So as an example, Meta is the very first one. Erica said Q's still in the trade. Good job, Erica. Yep, Meta played nice off the fib. Exactly, PK. That's exactly it. So if we look at the 265.54, this is not earth-shattering. What I'm going to show you right now is not the first time you've seen it. It's the 500th time plus that I have shared it and showed it. Why? Because if you can find consistency in the strategy and the system that you use and trade, you've got the best opportunity to be successful. If every time it needs to be a different recipe, it's a problem, right? Did you put vanilla in this one or was it salt? I mean, it's a problem, right? I don't want all these different recipes. I want one singular primary recipe. If you're looking at directional trades, this is it. So we've got that 265.54 level. Let's go over and look at Meta. All right, come on, baby. Oh, no M there, no S there. That's why. META. Okay. Let's bring it in, baby. So we gapped up. Nice. We ran higher. Nice. And we closed. Here's the 265.54. We closed. Close. 265.64. 10 whole cents above that level. So 265.54, right? The next candle, we open up, opening price, 265.64, same thing. We drop down to 265.61, so just a few pennies, and we bounce. We wait until we get up to about that 266.5 level, which takes you right about here, and you're in that trade on that second candle of the day. Sorry. On that second candle of the day, you're in that trade and you are rocking on. You could have held on to it. You could have gotten out as it backed down below the moving average and been out at 268. from about 266.5. That's $1.50 move. That's what I did. $1.50 move, about $1 on the option. You did one contract, you're up $100. You did 10 contracts, you're up $1,000. You did, like a buddy of mine who does 100 contracts at a time when they do these, you're up a heck of a lot of money. Okay. But you only need one. See, I call it all the time. I say it all the time. You're just one trade away. You're not 100 trades away. You're not 100 contracts away. It's just one trade, right? Let's see. Linda said Microsoft, 2 contracts, 2 trades plus $270. Great job. Absolutely great job. Right. And then guys, I had 4 other ones. I'm not going to go into all the details behind them, but I'll give you the info of who they were and what happened. Right. So NTAP was up 8% today. I didn't get a lot of my covered calls off on Friday. All of these are usually done on Friday. I had to do them today. Shopify was 11% today, 11% rate of return. These were all diagonal call spreads, put spreads. TXM was 8% today. Really nice, super nice. And then if we look at the RUT, on RUT today was 11% rate of return. I will spend a whole whopping 1 to 3 minutes a day at most. And that's just really looking at it and saying, okay, it's not anywhere near my numbers, and walk away. Right. And then come back again later on and check out to see what's going on. Right. 1 time a day is all it is. If it hits a target, I'm going to be taken out of the trade. I'm not worried about it. But I look for 11% a month. Every single month is my goal on this. We have not had a losing trade in the last 11 months on this RUT trade. Okay. It's one that we teach and trade outside of or inside of Covered Call Explorer. All right. Let's see. All right. So along with that, we've got some other trades to share with you today. So, many of you know that Amelia does some trades on a regular basis, but so does Sean Reed is starting to produce some content for us here. So this very first trade here was Sean's, right? So he did a bull put credit spread, 50-55 strikes. He got in on 523 and got out on 6-6. Target was met. So what does that mean? Well, on 523, he did a vertical spread, bull put spread, credit spread on Shopify. He got a 65-cent credit. His goal is to capture half of that credit, half, right? Well, that means get out about 32 cents, right? He wound up getting out at 18 cents. What does that mean? They paid him 65. He paid back 18. So 45, 3, 2, 5, what was that? 45, 47 cents, whatever it is. He paid a very small part of it back to end his obligation and walk away, and kept the majority of the monies on this trade. So this was in Vegas Spread Mastery. And this was over the last week. You can see 523 to 6-6. Okay. He also did one on CZR. And these were all trades that were done inside of his live trading room. All right. He did a bear call spread, 50-55 again, 526 to 6-2. So he got a credit. Wait, what did he do here? 526. Oh, see, it was a debit spread, not a credit spread. Debit spread. So he got 12 cents is what he paid to enter into that trade. He got out of the trade at 48 cents. So what is that? 48, 38, 36. He made 36 cents, 12, 20. That is a 300% rate of return on his money in 5 or 7 days, whatever that came out to be. Right? Great job, Sean, on these spread trades, on these spread setups. Okay. Now, Amelia sent this one in today. So this was Inner Circle trade. So a couple of days a week, we do a live trading room that is for our Inner Circle group, right? You come, you don't come, it's up to you, but we do it 9 o'clock to 11 o'clock. Amelia mans that room each and every day that we do it. It's 3 days a week. We do that trading room. And then they're in there. Amelia's teaching the whole time she's in there, as she has others from Inner Circle in there teaching everybody as well. So 12% rate of return in 43 minutes. So what did we do today? Right? This is a vertical spread done on Lululemon. They did 5 contracts. Okay. It was a debit spread of $5.75. So basically, for Amelia to do this trade, she would have to lay out $5.75 or $575 to do one contract of each, right, on the debit spread, one contract. And that was at 9:40 this morning. At 10:20, So 40-ish minutes later, 43 minutes later, she got out of that trade and they paid her $6.45. So that's 45.50. That's 70 cents or 12% rate of return on this debit spread. And you can see this is where she took the trade as it pressed up into the fib line, right? That's where she bought it, and her exit was up here, right? So she did phenomenal on this setup, guys. You got to give kudos. You got to give kudos to not only Amelia and to Sean, right, but to everybody that's here that put their trades in. Congrats on the trades that y'all did, right? If you're not doing them yet, folks, just start putting non-funded trades in. I don't care if you understand it. I really don't. I care that you hit enter. You will not get this if you don't hit enter. You will not get this if you don't develop a trading system. You must, not should, not might, not want to think about. You must develop a system documented on how you are going to trade whatever it is you're trading. Whether you are doing credit spreads, whether you're doing debit spreads, whether you're doing directional trades, futures, it doesn't matter. Take your system, document it, write them down. I think one of the greatest things we've done for individuals that are in our inner circle, okay, is on our longer meetings. We do every quarter, we do a full day live training, which only used to be done live. We now do it because COVID, we're now doing it online. We do have one time a year, we do meet in New York. And that live, in that live training, we've gone over for those that wanted to do it, and we've taken their trading system and developed a trading system for them, where we documented and pulled out the answers to the questions of what they were missing, right? Of what they were struggling with, of what they did not see. One of our students, Bill, who's an amazing spread trader. You asked Bill, is he in here today? Let's see, probably not usually on Monday. He's not. So you ask Bill on any given time, how many open spread trades do you have? And he's got to think about, he's kind of 19. Right? And that's what it is. 15, 20 trades he has open at any given time, much more than I tend to keep open. It's a little bit harder for me to manage that many open positions all at once, right? In my head, right? Bill's an amazing trader. We laid his system out and he goes, I've never seen it so fluid where I knew everything I was doing in there like I did when we had it written down. We did it for Roman, we did it for Scott, and we've done it multiple times where we laid the details out for those trading systems. Roman, who's an amazing trader, had never had it documented before we did it inside of Inner Circle, right? So document that trading system for yourself. It is the only way you're going to get successful. You may see some success now, and that's awesome. You may be the 1 in a million that doesn't have to write it down. I have never owned a business that didn't have written down what I was doing in that business. Never. You don't buy McDonald's and they say to you, here's an empty binder, start writing SOPs. Standard operating procedures. You start writing those out. Oh, you have to fire somebody? No, we're not giving you any paperwork for that. You got to go find out from an attorney what paperwork to fire them with. Everything is inside that manual. That manual needs to be your trading manual, right? Let's see. I love my office. I don't know how much of that you could see. Oops, sorry about hitting the mic. All right, that's just my cutesy little slide. Someone else actually made it for me. It says day trading playbook, top secret. This confidential document is not for distribution. And there is a disclaimer type page inside of there that if you get your hands on this and you do not return it, our attorneys will be reaching out and contacting you, blah, 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 all that good fun stuff, right? But that binder, you can see the thickness of it, maybe a little dusty. That's okay. You can see the thickness of it, right? I've got plastic sheets in there, okay, with the covering on it, all right? That is my manual for my strategies and my systems. It is all documented. It's all written down. It's all something that goes start to finish, soup to nuts, following the identify, enter, manage, exit strategy creation system. Every bit of it, right? You need to lay your trade. Just take a system and lay it out. Don't worry that you don't get everything. If you all of a sudden you're in a trade or you realize, oh goodness, I forgot this, add it. If the market changes, adjust your system, but get it documented, get it written down. Appreciate everybody with the kudos and the great trades to everybody. Amelia is awesome, Linda, without a doubt. She certainly is. Congrats to all, Linda said. Good job, everybody, on those trades. All right. So let me take that down for now. Let's go ahead and go over and take a look at the market. So I still don't have my intraday data working yet on SPX. So let's go over to account, TradeStation. Right? Let's go over to TradeStation and take a look what's happening there. So right now we're at 43.13 on TradeStation on the S&P 500. So 43, it's actually 43.13.48. We're at 43.12.66 is our fib line. So what does that mean? We just broke above. We just broke above that negative 272 fib line. We got out of the rectangle. We got out of the rectangle on Friday, barely. We just closed above. Today we gapped, we ran. We're at 43.13.56. We're at 43.12.66. So about $1 above that line is where we're at. Okay. So what does that mean to me? Well, we just broke through the next level of ceiling, the next resistance in there. The bullish trade is still on. Now, granted, this week, the 14th, Wednesday, right? Wednesday, the Fed, it's got their 2-hour meeting or 2-day meeting rather. You're going to hear it on, starting at 2 o'clock, 2:30. You're going to hear some of the details behind it. We'll find out about pause. Does anybody know what the chances, I keep forgetting to check before we come here, what the chances are, is Jim here, a trip? The chances are of a rate hike. Rick, I don't know if you've got a Trip, you're in here. If one of you guys can give me that, that would be great, right? But they are increasing the chance of the 25% rate hike. And they said, many Fed speakers have said, even if we don't raise this time, don't take that pause as a stop. Just, it's a pause. We might need more data, right? PK said, did you say that covered call, that Russell trade is taught in Covered Call Explorer? Yes. So now, don't get me wrong. It is one of the trades that we do in Covered Call Explorer, right? If we go over here, let's see, foundational trainings, diagonal spreads, iron condors. There's a manual for iron condors. Okay, diagonal spreads, manual, Wheel of Fortune, my entry rules, what are covered calls, selling naked puts, the manuals for them, and so forth, right? So that's everything that we have inside is all right here, right? So where it just says diagonal spreads, that's the calls, the puts, right? Everything is right inside of there. There are some bonuses up there as well. These are the weekly trainings, right? The last 4 weeks. These are the manuals for it. But so PK, do we go over that in here? Yes, I give the details of what strikes to trade every week. It's rare that I turn around in there and say, you know what, we're going to pass because I don't like what we're seeing. And those that saw on Covered Call Explorer this week, we're at parity between the calls and the puts, which we have not seen in over a year. Plus, I don't remember the last time we've been at parity, right? But we're at parity between the calls and puts as far as what they're valuing them at. So we're at 74.7% for no raise on the Fed, 25.3% for a quarter point. Yeah, I've heard some pundits call it a skip instead of a pause. Exactly. And that's really, it's not going to just be whether we raise or not. It's not going to be whether we raise or not. It's going to be the other words that come behind it of what's coming up next. So parity, basically we're looking at they're equal, right? The market makers putting equal value on the puts as they are on the calls, okay? So if we look, let me see if I can find a document here. Thank you, Rick. I appreciate it. Remember, I hope that helps, but let me see. What am I looking for here? Cover Call Explorer, right? I have it open already. Let's see. Okay. It's opening. Oh, it's opening. All right. So if we look, here is the iron condor from a few weeks ago, from 6.2. All right. This was the current price of the rut. The expiration, we're looking at the July 21. We're going to sell the 1940, buy the 1950 on the bear call spread for 53 cents. Protection 182.06. Don't worry about what it is for now. Just remember the number. Put side, 15.35 and 25, 50 cents of premium. Protection, 232.94. Here is where the rub happens. Let me shut that off there. I don't need that. Let's go at this. Let's look at protection only. Right? This tells me how far away our short leg is from the current price. Same thing on this side. So that means the market maker is putting more emphasis on the market, the overall market moving down than they are up, because they're giving $232 to pay me 50 cents on the put side, okay, versus $182 on the call side. All right. This week, we were at parity. We were a couple of dollars difference in there, right? Barry, the rut options are European style options. They are not American style. The key to remember that there is, if you become in the money on an option on Microsoft or Meta or whomever, right? Goldman Sachs, if you have intrinsic value, you can be exercised immediately. If somebody just wants to, doesn't matter intrinsic value, you can be exercised immediately, okay? On an option, or you could exercise it that's an American style option. That's stock options. Okay. On the indexes, not all, there are some that are still American style, but on most of them, they are European style and they can only be exercised on expiration date. All right. That's key, which is the Thursday before the expiration Friday. That's expiration day. Expiration Friday is a settlement day. That's when all the options are settled. This one, Barry, is it's a option on the future, on the index, but it is European style instead of American style. All right, that back down. I don't need that. I don't need that. I hope that helps, Barry. Let's see. Okay, let me take this back now. So let's go back in here and look. So we're already up there, guys. What are we looking at? Good, Barry. I'm glad to hear it. So what are we looking at now? Right, we've got a strong bullish move right now. We're a little further away from the moving average than I like, so I'd like to see the pullback at some point. Excuse me. We've not had that yet. We broke out here. We pulled back and dropped. Let's do it this way. We broke out in here, we pulled back and dropped below the moving average. We broke out here, we retested the 41.81, the 8 moving average, all of them, magnifique, beautiful, whoosh, nice bounce that next day right off of that 41.81 confluence of the 8 moving average. We gapped up and then we got into this rectangle. We broke out on Friday. Today we gapped up and broke away. Right now, I need the retest and the bounce, but I really would like to see us come back and retest that 8 moving average again. Okay. The more you can get, the more times you can have this happen where you have a moving average in here, right? Like this. And the stock moves up and retests, moves up and retests, moves up, may not come all the way back, moves up and retests, moves up. The stronger your move is. If this is your moving average and your stock just does this, right? What's going to come usually follows right behind it is this, right? You've had no safety measures taken in there on that way up. It has been just a catapult straight up. We don't want that. Ideally, we want that retest, and that gives us the best opportunity to be safe in this trade, okay? So I'd like to pull back. Will I trade it if it breaks above that 43.12 retests and bounces? Yes. Would I like it better if it retested the 8 and gave me a confluence with the 8? The answer is yes, very much so. Okay, we're in a true bullish bias right now. All 3 moving averages are in the correct order. The 8's on top, 21 is in the middle, brown is on the bottom, which is the 55. So pink, green, brown. Excuse me, are our moving averages that I use primarily. I use a 5 as well, but that 5 is normally only used on swing trades, which we are now starting to call again on swing trades. It's a hot mess here today. All right, perfect. Good. Let's see, did I get that answered? I did. All right. So overall, I like the direction of the market. We are right now up almost 16 points. Good strong move. We're up to 43.14 half. Again, here we are 42.12.5. So about $2 above that. I'd love to see us get up to above the previous high, retest and bounce, or again, better served would be pull back to the 8 and bounce, right? That would be my preference inside of that. But this was a good pressure cooker trade setting up in here that we got to break out of on Friday. Okay. Excellent. Excellent. So let me take you back into the document. And for whatever reason, it just keeps shutting down on me. All right. If I was starting over with only $100, what would I do today? Right? We've got a packed house here today. I wonder how much of it was the topic that we're teaching on, right? What would I do today starting out? Okay. So first off, let's go ahead and let's get some basic insight down to make sure we're on the same page. Okay. Let's see how much I could keep this on there and still keep the topic in play, but let's see. Maybe I'll make it a little wider. All right. So the very first thing is actually, let's do it like this. What do you know? In other words, if I was starting over and I was a brand new trader who has never seen anything from the market, the answer to that question is simple. The answer to that question would be nothing more than learn a strategy and paper trade. That's all I would do. One singular strategy. Okay, that's all it is. So if you're brand spanking new, you don't know a stock from a rock, you have never placed a non-funded or funded trade, you've never really looked at a chart before, then you've got a few more steps to go through than someone that would be kind of a, what am I looking for? That's kind of got a little more experience under their belt. I'm not talking about being a guru at this. I'm just talking about where you've done this for a little while. Okay. So for me, if I lost everything, right, for whatever reason, I lost it all, bad business deal, I lost everything, I got $100 to my name, what would I do? Okay. So the very first thing is I need to figure out strategy. I need to figure out a strategy. What would that strategy be? What I want you to think about is this. You've got $100. So what's the likelihood that you're doing covered calls, right? Probably not very good. Or naked puts, probably not at all, right? Iron condors, nope, not going to happen. See where I'm going with this? They're great strategies, but every strategy has a place. If I am trading with only $100, then that can and will become a problem if I'm trying to do a strategy that will generate me in a week $3. Even if I had enough money to do the trade, $3, $5 total, right? Because I'm getting 3 cents, 5 cents of premium that far out of the money, right? So, and PK brought up a great point, right? I haven't said it yet, right? But we're going to talk about the cash in a moment. So I'll leave that for now, PK. I'll say what you wrote down in just a few minutes, right? So for me, it's going to all be directional. And it's going to be directional only in the direction of the market, which is the SPX. Right? So in other words, I will only take directional trades, calls or puts, if I have on a, so we're gonna assume, let's do this. Assume market is bullish. Okay. Right. So what I'm looking then is to take a call long call option on stocks with a true bullish bias. Right? Period. Right? What is true bullish bias? We look at the moving averages right now. The 8, which is the pink, is above, is the highest line. it is above the 21, the green line, which is in the middle, and the brown is the 55 is on the bottom. They are all exponential moving averages. Yes, I do exponential up to 55. If I went 56 or higher, it becomes a simple moving average. I do not like 55 as a simple. I think it belongs as exponential. That's my way of trading. You trade it the way that you choose. All right. If I look at MasterCard, we are in a very ugly scenario. The green is on top. The pink and the brown are kind of equal. This is not a trade I would be taking on. If we look at Google, right? Google, we are down below the pink. Well, the moving averages are in the right order, but we are in a bullish neutral bias. This is not a bullish bias. A bullish bias says we are above all of our moving averages and they're in the right order. This is a true bullish bias. If the moving averages were mixed up, we would and the stock was still in the same place. In other words, if my 8 moving average kind of dropped down here, and this was the 21 up there, right? Here's the 21, and this is my 8, right? Just pretend. Then we're in a bullish bias, but it's not true bull. So I would pass on this trade. I would only take it if it is a true bullish bias. Okay, that's critical that we don't even get there. If that's not the case, we don't even consider taking this position on. Come on. Okay. There must be a clear. Oh, no, I hate when that happens. We're going to fix that. Clear. And if I don't spell it right, sorry. Concise entry. What does that mean? Clear and concise. There must be a clear path to my next resistance. There is no moving average in the way. There's no Bollinger Band in the way if you're using those. There is no 100-point level in the way. There's nothing blocking me to my next level. Okay? That's clear. Concise means I'm taking the trade in the right place. If I tried to take the trade today on Adobe, on the open, let's say, that we did not have, we had a clear path to resistance, but we did not take a concise entry. Concise would have been trying to take it right near the fib line as it bounced off of there. That's a concise entry. There must be a clear and concise entry, or else you do not take the trade. This is not rocket science. Guys, I am interviewed almost every week by Benzinga. I'm brought on as the expert to talk markets and fibs. And we go through the exact same strategy, and I do the exact same thing every week. And questions come across the text chat every single week. And I recognize some of the names. And so how do you set that up? What are you looking for? What does that mean? Right, guys, it's clear and concise entry. We have to have that in place. In other words, if I had an entry setup, let's say that entry setup came, let's say we pulled down, we'll make this a solid candle, okay? We pulled down one more time, solid candle, and then the next day we get a bounce, right? That component right there, that would be a great entry because my stop is going to be down here. If I took the entry on this day, my stop is still going to be down here. If I took my entry, my stop is going to be down here, right? So I want to make sure that I am as close, I minimize my risk as much as possible in that trade. And I do that by finding the right place on the chart to take the entry. That's all there is to it. You've got to have the right entry point. And I just taught a presentation not long ago where I called something the big E for entry. You've got to find the right entry. Although identify, enter, manage, exit all have extreme value to them. No one can be discounted and said, that one's not important. But if you find the right entry, you minimize your risk and you greatly increase your odds of being right in that trade. Then if you screw up on the exit, okay, I understand. Maybe you didn't make as much. Maybe it cost you a little bit, but it would have been a lot worse if your entry was really bad, right? So the exit's important, but the entry is critical. Adobe does have earnings coming out this week. It is the 15th, I think. I do believe. I do believe. Okay. Okay. Let me go ahead and clear this off. All right. Is this making sense? Give me a 1 for yes, a 2 for no. Drop some magic on me, folks. I don't try to make it hard. I don't want you to type out, yes, Rob, I think this is awesome. Oh my God. 1 for yes, 2 for no. Right? Okay. Beautiful. Beautiful. Okay. Good. Good. All right. Let's go back. Right? So my strategy would only be to take these types of setups. All right. Now, number 2 is we need to find candidates. We need to find candidates, right? You have got to find candidates that fit your risk profile and can give you enough profit on the trade, right? So what would that be, right? So we're going to look for things such as price, volume. So I'm going to do that tab first. Right? Wilders, ATR, which is average true range, right? I want to make sure, right? You could be checking or should be checking for things like earnings. INGS. You should be checking for earnings, making sure that they are at least 3 weeks away, right? And that gives you enough time in most instances to not run into the crap of getting whipsawed by volatility when the market makers are taking advantage of premium and you're getting ripped off. Okay, so what are things that we're looking for? Now, first off, what I would be doing, again, what would I do if I was starting over again with $100? Is I would come over here and I would click on this hammer and screwdriver, chisel thingy, whatever the heck it is, okay? And I would create a filter. A new filter is what I would make there. And what I would do is I would look to put in there as an example, I would want to put closing price in there, right? So what price stocks am I looking for? They automatically come as percentiles. We're going to change it to value, okay? So I want my stock, as an example, I want my stock above 20 and below 80, all right? Right now, there are 4,462 stocks that fit that criteria. Ooh, all right. So what else can we do? Well, let's go over to symbol groups and let's go down to the very last, that should be the very last one, and it's weekly optionable stocks. That now brings that 4,400 down to 156 candidates. Ah, nice. Okay, let's go and put in volume now, right? Which is price and volume, right? Just go with volume, not 20 days or 5, volume. No weighted, just volume, all right? Again, it comes as a percentile. Don't use that. Switch to value. Don't ever put a maximum volume you're looking for. Oh no, if it's more than 10 million shares, I don't want it. Why? It means a lot of people are after that one, right? But I am going to put as a minimum 1 million shares, right? That takes me to 120 candidates, right? So maybe my stock price is a little bit too wide. So instead of having a closing value of 20 to 80, maybe I'm going to go to 30 to 80. Right? So that takes me from 120 down to 102. Maybe I go 40 to 80. That takes me down to 70 candidates. Okay, I think that's a good manageable amount of stocks for me to add to my watch list. Okay? So now I'm going to go ahead and save this puppy. I save everything with my initials, RR test. Start with $100 PH for power hour. I know what it is. Okay. So Barry, that's 1 million shares traded each and every day. All right. Now I want to display that list. Here's my stocks. There they are. Right. You're going to pick, I'm going to close that down. You're going to pick from these stocks, the ones that fit your own personal risk profile. I can see now there's no average true range on this one. Okay. We don't have that here. I did not go through and add that in. All right. So let's do this. Let's go up to the top. We're just going to do this as alphabetical order. Not trying to get fancy here. All right. And the reason I didn't do it is we just don't have time to build a criteria out. Right. And for me to explain what I just did there. So one of the things you could do here, if you're sneaky, if you've already got my Fibbits added in there, or Wilder's average true range, you could sort by that. Fibbit is nothing more than double the average true range. That's all it is. So Roku has a $7 Wilder's average true range, which means it moves 350 a day. You can just add Wilder's average true range in there. Okay. So because the other side of this coin says I have stocks that only move 60 cents a day on Philip Morris. That's not for me. I ain't interested in that puppy. They're gone, right, off my list. So I'm going to come back here and say, okay, CRSP. Now, well, let's just do Roku because that's on our pop list all the time, right? So Roku, it moves $3.50 a day. It is a $70 stock and moves $3.50 a day. Right? What is that? 5% of the stock's price. It moves every single day. Yeah, I think that's pretty good. 10% would be $7. It moves $3.50 a day. It's 5% of the stock's price. That is an amazing movement on the stock. Okay. Right. Average. So Brenda, I like Wilder's average true range better than just average true range. The difference is Wilder's encounters or allows for the gap, right? Today's opening price, that gap. Average true range does not. Right? If you don't have Wilder's, most software programs don't. It's average. Inside of Omega charts, that was a big thing for me when we decided to move forward with this as the platform. Is I made sure it was clear that it had to be inside of there, and it is. Okay, it is. Yeah, Erica said I like Roku a lot. I saw that email, Erica. I know. I'm very happy for you. How has it been doing for you, Erica? How well has Roku produced for you? Because think about this. If you had Roku open up last week on Thursday, it opened up on Monday, Friday. No, what do we have? Yeah, this is Friday. This is on the 9th. Okay. So it opened up on this day, opening price of 70.72. We've got 70.75. It ran all the way up to 74.64. So guess what? Guess what? We're in, we're out. Trade is over. We crushed it on Roku. Okay, crushed it. If you look, what were the numbers? I got to go back and I'm not going to remember. 70.75. Let me just put two lines right on here. Change the first one to 70.75. Right, there's our support and resistance was 74.64. Because you can't make this stuff up. Getting in near the very low of the day, getting out near the very high of the day doesn't happen very often, but I'll take it. Okay. Now, of course, I'm looking for a pattern. We opened up, we pulled back, we ran. I'd like to see him move up, a retest and a bounce, right? We had a small little hiccup pullback after that first 5 minutes. We're talking about taking this trade right about 70. You grab a pen. You're taking this trade at, nope, that color not going to work. Let's get white. You're taking the trade at 71.25, right? That's the entry, the big E, okay? You're going to get out of this trade right about 74. So what are we talking about? 2 3/4? $2.75 move in there, of which you're going to get a $2 profit on that trade, right? Here's the thing. Here's for kicks and giggles. I don't know if we've got it loaded here. Let me see. So here, let me just grab this. Let me go back to Roku. I'm trying to get the option chain to load. If it's not open on a screen, which it wasn't, it still didn't load. That wasn't nice. All right, come on. All right, finally, the option chain took. All right. If we look right now, let's go find an option that fits my criteria. I am looking for a 65 to 85 delta. So that basically, I'm just going to do it outside the open interest so I don't write through it, right? Right in here. These strikes are what we're looking for, okay? I have a 66, 65 delta, 1,500 open interest, right? We're looking at that option costing me $3.58 is the mid price, 350 by 65, right? I would go, I know Roku, I would put it in at $3.60 and I would be happy with that. I wouldn't go after the 358, I'd go after 360. But now you're talking about $358 to do this trade, $360 to do this trade, to make $200 last week. Let's say you don't make all of it. Let's say it only made $1. Right? Whoa, I ain't seen that sucker that big in a long time. Actually, I've never seen it that big. So cash in, if I made $1 and you divide that by $3.60, that's 27, almost 28% rate of return for the day on a stock that you spent a few $100s on. Right? So you've got to find stocks, candidates that not only fit your risk profile, right? But you need to make sure then we're going to look at number 3 is our earnings. Our options. Right? You want to check things such as open interest, OI, right? You want to check bid ask spread. You want to check things such as fair value. Okay. Make sure that the spread is a comfortable spread. Make sure, in other words, if you look at BKNG, again, why is it not playing nice? All right, let's try it again. All right, there we go. So look at booking, 41.80, let's just call it 42 by 47. $5 bid ask spread. Yeah, you can negotiate. Remember, you got to negotiate on the way out too. So that to me becomes a little bit of a problem. I don't want to have to do that if I'm trading with a smaller account, much more concerned about the risk and such. Okay. So make sure the stocks fit the risk profile. Make sure the options work and make sure the value is fair. So wrong stock to do it with is on booking because it's not going to be fair value ever, but you don't trade booking for fair value. If I go back here and I find that 65 delta, it's trading at 358 as its mid price. I come and look at theoretical value, it's trading at 312. I'm okay with 312 and it's trading at 358. What you want to be cautious of is, as an example, with booking, all right? You can see this option right here, and we don't have the open interest on it, but let's just see, 66 delta, right? It's trading at $54. It should be trading theoretically at 47. So now you've got to mentally establish that you're okay with that 48 to 54, that $6 overvalued, which means you're spending an extra $6 when you hit enter. You've got to be acceptable to that number right out of the gate. Right out of the gate. Okay. Erica said, aren't we supposed to target open interest more than 100? Absolutely, Erica. Yes, you are. Right. This is a stock that I have traded for years now. Years. Okay. Booking over a decade plus. And it is a volatile stock. It is not for faint of heart. So those of you that are newer traders should not ever even look at, you should pretend booking doesn't exist as a company even. Okay, just don't do it. Yeah, booking moves. That's why I like it. That's why I like it. We've made massive money on booking this year. Massive money on booking. Now, have we had some trades go against us on booking? See, we certainly have. Can it get expensive? See, very expensive. So let me see something here. Let's go there. Let's open that there. I don't know what screen it's going to open up on, so give me a second. Yeah, so theoretical value is the same as fair value. Yes, Brenda, it is. Close trades. Okay. So let me find booking. Okay, here's a booking trade. Last trade on booking, we were up $7,800. And I may miss them. I'm just doing it by eye. $9,750 on booking. Right? Yeah, I'm just trying to go really fast. Chipotle is another one, by the way. CMG, we lost 3,900. We made 4,500. Excuse me, the day before we made 2,900. Booking, there we go, $1,000 loss. I will take it all day long. $4,000 hit. $9,000 to the good. Chipotle, $13,000 to the good, right? 13,000 profit. So a lot of opportunity on those bigger stocks, but you've got to be willing to take on that risk. And with $100, I couldn't even afford the options at $50 each. Couldn't even afford it. So it doesn't fit. Okay. So I am one that doesn't believe that each person can, I believe that anybody can accomplish what they choose if they will put in the work, the time, the effort to get it done. Okay. I was the type of person that when I first started trading did not have a whole lot of money. I made really good money. I was making six figures, but I was making 100 grand and we spent 120. Right? We were definitely keeping up with the Joneses. Well, for us, in our case, it was with Luigi and cousin Tony, right? They got a new house, we got a new house. They got a new car, we got a new car. They got a new TV, we got a bigger TV, right? We're very much into making sure that people who most of them we didn't care about would come over and say, oh, see what I just bought? That doesn't matter to me any longer, okay? What matters to me is I don't want to buy anything. I want to just have assets I control. I don't need to buy it, okay? And I'm not saying you shouldn't buy nice things. There's a gentleman out there I used to teach for at our church. I was the financial ministries director, and I used to teach Dave Ramsey, right? Financial Peace University is what it was called. And he teaches you how to use money properly. He talks about investment strategies. I'm not a fan of his 25% each across the board strategy, but it's better than what most people are doing, which is nothing, okay? But we saw people get out of massive debt in there where people had 20 plus credit cards, shredded them, got rid of them. Paid one young man right out of college, paid off $60,000 of debt the first year, stayed and lived at home. One of his phrases were, if you want to live like no one else, then you need to live like no one else. If that means you got a very small trading account right now and you don't feel there's nothing there to start, this is a good place for you to get some details to start. But bottom line is this: do not be so proud that you don't go and deliver Domino's on a Tuesday night because that's the night you've got some free time. Do not be so proud that you don't go shovel snow or mow lawns because you've got some time to do that. Do not be so proud that you don't take your power wash that you do your own house with and go power wash somebody else's driveway and make $100 for a couple hours, right? The thing about it is every penny you make, dump it in the trading account. There is no, oh, just this week. No, because now you're just trading dollars for hours. You're doing this with an end in mind. The end in mind is to build up that trading account. But with a very small dollar amount, folks, if you had just $100, you find stocks that fit your risk profile, right? A Roku's not going to do it. It's too expensive of a stock, okay? I could do this on lower price stocks, and I'm going to get smaller dollar amounts, but my rate of return is what I'm looking for. If I can generate 10, 20% in a day, 10% on $100, I make $10. You may look at that and say, Rob, that ain't cutting it, man. It's just not cutting it. There's no way. But if you take that money and you compound that over 30 days, right? Y'all know the story behind the penny, right? If you put a penny into an account and you double it every day, after 30 days, it's over $1 million, right? It's actually like $10 million. You went to 35 days, you'd be one of the richest people in the world, something like that. So instead of looking at it as, well, I can use that money this week. No. I'm going to take the money out and spend it. No, you're not. You leave that money in that account. You build that account up. You build it up till you can get to 2 contracts and then 4 contracts and then 8 contracts and whatever number you're shooting for. You build it up to where you've got a comfort level that you never have to work again. You can make it back. If you will start out, you lost it all and you have $100 left, and you will start very diligently. You've got to be diligent. You've got to find the right stocks, the right candidates that you need to push forward on. All right. But for me personally, I would do whatever I can to beg, borrow, and steal to dump more money into my trading account. But let's say you don't want to, you don't have the time, family obligations, sickness, whatever it is, you just don't have the time, you could do this. I have watched individuals on their deathbed crush it at this. I saw the gentleman, he was on a stage of a company that I was teaching for. It was one of my students. And the wife did not like that he was teaching his 2 children how to trade. And because she felt that once they learn, he would feel as a dad, he did his job and he can give up and move on. And he was asked on stage about that. And he said, man, I'm too busy making money to die. He said, I ain't got no time to die. Absolutely not. Right? When you figure this out, you can push forward, push hard. Guys, you've got to be committed. You've got to be dedicated to it. Get to every free training that we do here. Again, if you had just $100, just dig in on all the free stuff we do. This training right now, we're going to strip this out. This becomes a YouTube video. Just as the one that was how to make $1,000 a day training we did a couple of weeks ago. It's now standalone, own individual YouTube video. Right? You need to check those videos out. You need to dig into those. Find a coach that you feel comfortable with. If you like my strategy, then follow me. If you like what Amelia does, or Brandon does, or Ryan does, or Sean or Tony or whomever, follow that. Right? If you like 2 or 3 of us, great. If you like myself and Brandon, let's say, take the things you like most about my strategy, right? And the ones you like most about Brandon's strategy, and you make you as a trader. Build you out as a trader, right? You can crush it. You can kill it in the market if you do these things. But you've got to be willing to do it. I can't do it for you. I can't force it to happen. I can give you the water. I can't make you drink, right? We've got people here right now that are making absolutely massive, massive monies trading the market, right? You can too. I'm not saying that you're going to. You can. But you've got to put in the time, the effort, the work, the energy. There is no get-rich-quick scheme. It is all about get-rich steady. It's not about quick. It's all about steady. Slow and steady wins the race. Tortoise in the hare, right? Envelope method. Still use it to this day with my kids. Dave Ramsey. Yep. Yes, Ola, the class is recorded. Let's see. Good class. Thanks, Ed. I appreciate it. Karen said, is the recording for this on WBHQ TV? Yeah, so we're gonna put it on WBHQ TV, which is in the upper right-hand corner of our site. You will find it on YouTube as well. We're not there yet. We got to take it, strip it out. We're going to edit it and clean it up and get rid of the uhs. And Sean may not like something I said in there and kind of tweak all of that. And that's fine, right? Sneeze, whatever. He'll fix all of that stuff up. But guys, you can do this. You truly can. Was this helpful? Did I kind of lay some steps out that I'm not saying you got it all down and you figured it out after today, but you've got a roadmap, a path to start walking down. Give me a 1 for yes, a 2 for no. And if you give me a no, don't worry. We'll just hit the eject button and we'll be good. Yes, lots of 1s. Kevin said, Rob, you've done wonders for me and my family. So true. Thank you so much for that. I appreciate it. Very helpful, Brenda said. Lots of 1s. Very helpful from Ed. There's Jeff with his 3s. Carlos said 1 as always. I got you, Barry. I knew it was yes. I figured it out. We're good to go. All right, ladies and gentlemen, there you have it. Remember this phrase, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, just 1 trade away. Never give up. Never quit. You can do it. All right, ladies and gentlemen, Lee dropped some links in the chat box. I'm going to leave the room open. Go ahead and get registered for the free upcoming workshops / trainings that are happening. Brandon's tonight, right? We've got a few more that are coming up very shortly. And I will see all of you at our next update. Take care, everybody. I will see you next week. Bye for now.